Hello, everyone. This is Tone Vase. It's time for one more midweek market analysis in light of the Trump. I guess people are calling it a surprise win. It's not a surprise here. And those that have been watching my videos over the last month or so, when I started doing this blog, I was um, hoping for a Trump win, and I was expecting a Trump win. And if you look at the past videos, everything played out almost exactly like I expected, and we're going to talk about that in 1 second. That's why I had to get this video out. I have maybe a maximum of 20 minutes because after that I got to run and catch my flight. I am headed to Russia. So if you are in Moscow over the next few days, I will be speaking at the Bitcoin conference in Moscow. So if you watch these videos and you're there, come by and say hi. All right, so here are the futures, and oh my God, has this changed? If you looked at this chart like I did, if you were watching this around midnight last night or like around 11 p.m., all hell was freezing over, basically. The Dow was down 700 points. The S&P was probably down around over 100 points, and the NASDAQ was down almost 200 points. It was complete craziness. And let's talk about some of that. Let me just jump into the S&P 500 real quick. So this is why I care about end-of-day prices and not what happens overnight. And this is also why I kind of stopped trading futures about 6 months ago, because the volatility was a little too much for me. As much as I love leverage and I'm an options trader, I tried trading futures for a while, and I'm taking a break from it. I didn't do as well trading futures as I thought I would. Not all traders are perfect. So this is what it looks like right now, and the S&P has just gone positive. So now this is a green candle. And if you were watching these videos over the last few weeks, what I was saying, I'm going to change up these charts, guys. I'm going to keep my lines there. I might move everything to trading view once I'm done with these travels and conferences, because I know some people saying that the charts are too small. So I'm gonna see if I can work with that. All right. So what I was saying is we'd get a bounce, and then a surprise Trump victory would drop the market. And then when people realize that a Trump victory is actually a good thing for the market, we would quickly rebound and make new highs. Now, no one can actually say what it means to have a quick rebound. And what happened overnight is even quicker than I could have possibly imagined. So if we had opened even half as bad as the futures were pointing to in the middle of the night, we would have been, let's see, it was over 100 point, it was over 100 point loss on the S&P. So we would have been, where are we now? We're at 2145, would have been at 2045, would have been right here. Probably should make it red. This is where the futures were pointing to as an open. And if you look at the arrows on my previous charts, this is probably around the area I was pointing to. But you needed to be a futures trader and you needed to act quickly, which is very, very difficult. I mean, hindsight is always 20/20. I did not trade this, and I even said it in the last video. Even though this is what I was expecting, a big fall of S&P over 100 points, it was happening overnight. I also stated in the last video over the weekend that my portfolio was leaning bullish. I had already exited my short plays right around here, and my portfolio was skewed to the upside, and I was willing to risk a short-term crash in the markets because I know that a Trump victory is good for the markets. So I was going to risk it. Also, everyone was expecting a Hilary win. I was going out on a limb saying Trump would win. I didn't explicitly say it. I kind of didn't want to jinx it. But if you saw the videos, it should have been implied. I also sent out my ballot with who I voted for. And a Trump victory is going to be very good for the markets. It also shows you how corrupt markets really are, right? Because when you have a candidate that is willing to drop your corporate tax rate from 35% to 15%, basically telling you you will make 20% more money in your business. And Wall Street is like, no, that's okay. We don't need 20%. We'd rather pay 20% in taxes. We don't even care if Hillary raises the corporate tax rate to 50%. We don't care. We'll pay a 50% tax rate as long as we own the politician, so we don't go to jail if we do something wrong, so we can continue to do whatever we want. And it's not just Wall Street, it's a lot of big other companies, you name it. They would rather own the politician and lose 20-30% of profits, but own the politician to keep themselves out of prison, to keep themselves doing whatever they want, knowing that they can always get the politician on their side. And this is the reason why a lot, especially Wall Street, was invested in Hillary. But at the end of the day, if Trump does manage to drop the corporate tax rate, he may not get it down to 15%. I should probably check who won the Senate. I know the Republicans have the House. If Republicans have the Senate, then he has a chance to drop it to 15, most likely 20. More realistically, if he can get it down to 25% over the next 4 years, that would be just great. So that would be good. Okay, so that's the S&P. The NASDAQ was even crazier. And that even 10 minutes ago, the NASDAQ was still down 40 points. The NASDAQ was taking a huge hit. And it's now rebounded. It was rebounding all the way up. Now it's coming back down a bit. Things are really, really moving. I saw it. I saw the NASDAQ only down like 2 or 3 points after being down 40. Let's see where we are now. It's refreshing. Yeah, and normally I would be looking at my portfolio, but if there's only a way to like blur out my account number, I don't even know if that's dangerous or not. But until I figure that out, let me not open my trading account where everyone can not only see my positions. It's easy for me to hide my positions, but it's not easy for me to hide my my account number, which I'd rather keep anonymous. That account's a bit important to me. Okay, so here's the NASDAQ, and it also has rebounded. NASDAQ was all the way down here. God, that was down really big. So here's the thing. So unfortunately, since I'm still being cheap and I haven't paid for a subscription to stock charts, I don't have the updated gold prices. And at this point, nothing is going to update. So we're going to go with the simplest solution and just take a look at them from FinWiz. Just for an idea, was it the Dow or was it the NASDAQ? I'm trying to see which one had the biggest hit. Let's go with the Dow Jones. This was absolutely crazy. We were down below 17,500. The Dow Jones has already rebounded almost 1,000 points. So we were down almost 1,000 points last night overnight. Look, I said that Trump is a surprise Trump win would crash the markets, but I had no idea how long. I did expect a rebound, but this crash could have been all the way down to 1,600, or it could have been down to 1,750, or it could have been only down to 1,750 for an hour and a half. No one really knows. But what I do know is we are headed to all-time highs. Probably by end of this month, almost definitely by end of the year. At least that's how I am playing the markets. Here is what the S&P 500 did. You know what? Let me zoom in a little bit. There we go. Here's what the S&P 500 did. Here's what the NASDAQ did. And now let's take a look at, what do we got here? Let's look at metals. Let's look at gold. Gold was really up because, again, it was the fear trade. Wall Street has created a fear mentality that Trump is bad for the markets, when in reality, he is not. But trying to time this falling knife or euphoria is very, very tricky. So as it stands now, I am basically at this point if gold closes below yesterday's low, I'm going to be bearish gold. I think that was it. You had a closing day high around 1310, and you had an intraday high around 1345, or whatever the top of that candle is. I can put it on an hour chart, but it doesn't matter. But in all cases, you had one, two, three, and now four lower lows. So once we break below 1250, the bottom kind of opens up. We do have some support just above 1200, but it's very weak support around 1209, 1209, 1210. And after that, it's clear sailing all the way to the bottom. Again, yeah, 1200 right here is some support. Over on the left side, that was the previous high back in October. And then it's very possible to retest those lows. Remember, 90% of the people will always be wrong. The fear trade is that Trump is bad and you have to buy gold to protect yourself. Where in reality, Trump is pretty good for the markets. Yeah, he's inexperienced as a politician, but that's okay. He's experienced in business. I'll take it. Currencies. Well, actually, let's look at oil. Oil didn't really do any big craziness overnight. We did make an intraday low, but as I said in the last video, I was looking for this to be the bottom in oil earlier this month. Yeah, we pierced it intraday, but this is also why I always prefer closing day prices. I understand that as a trader, if something is going way against you during the day, you may get a margin call, you may just get scared and cut your position, and then it rallies all the way back during the day. But you have to have that cushion. You have to be willing to give the intraday a break. I know I've been guilty of it as well, cutting my positions too early or not cutting my position early enough as it keeps falling and it closes so far below my target that it becomes a terrible trade. I understand these things are difficult as a trader, but in order to project something into the following day, you really need a close price. This is a true scare in the market. I was looking for oil to rebound after this oversold condition, and I'm sticking to it. I am looking for oil to rebound unless something crazy happens in the market where we have a closing lows. If we close at current levels across the board, I will be bullish stocks, bullish oil, and bearish gold. Let's just put it that way. Okay. And finally, let's look at currencies. Oh, I wonder if they have the Mexican peso over here. They probably don't. Yeah, too bad. I can jump to another site, but I'm kind of short on time. Let's just jump straight to the dollar. Okay, so here's the dollar. Again, it was a huge scare, and the dollar is already up. So if we close at these levels, I fully expect the dollar to continue going up and break out because I've been bullish the dollar. I was expecting a pullback down to this 96, 97 area. We have a closing low at 97. We have an intraday low at 96. I will take these as a reasonable pullback. Assuming we close above 98 today, I have to be bullish the dollar. And bullish the dollar means you are bearish pretty much everything else. So here is the euro. Again, I expected the euro to come to an end relatively quickly, and my overall projections in the euro are very, very negative. People are going crazy over the Japanese yen versus the dollar. I really don't. I don't consider the Japanese yen all that important. Maybe I'm different than all the other traders. I really don't see all that much relevance in the Japanese yen. So I almost never talk about it. British pound. I was bullish the British pound, relatively speaking, right? Because if the dollar is going up, everything against the dollar is going to go down. But I believe the British pound is unreasonably oversold, which is why I am more bullish the British pound than most other things. You know what? I'll do Canadian dollar next time. I know someone in the comments asked me for it. I haven't looked at Canadian dollar in a while. It looks like Yeah, its a trajectory continues to go down, but I'll talk about the Canadian dollar later on. I did want to talk about the Mexican peso. I'm not sure where it is right now, but I did see it as high as like 21 at one point, and now people are suggesting it's going to go to 25, which is great for me, I guess, because I'm in the US and I plan to be in Mexico in February. So it's great if it's cheap, but I really don't understand what the big deal is because if I look at this weekly chart, it's been having problems for 2 years. So, and it came all the way down to its 50-day, and now it bounced off the 50-day, and it just made a high. So, look, the Mexican peso going back to 20 is really not a big deal. It's exactly where it was a few months ago. It's a little bit higher than what it was last February. And that's another thing. I was in Mexico mid-February last year, and I clearly remember Mexican peso being 19, about 19 and change to the US dollar. And I'm watching the TV last night. I'm watching Bloomberg for all the election and market news. And they're all saying, oh my God, it's the worst day in Mexican peso history or since their devaluation like 15 years ago or whatever. And it's all the way up to 20. And I'm just sitting on my couch going, yeah, but I was just there like 9 months ago and it was 1950. What's the big deal? I mean, a lot of these talking heads, I mean, they're making mountains out of molehills. Uh, it's a, it's not exactly a third world country. It's not that. I guess it's a poor country. You mean it's sort of a poor country. Look, the U.S. dollar is strong, and things against the U.S. dollar will fall, and that's okay because Mexico exports a lot of things and just export more things. They all just became cheaper for other countries to buy your stuff, like avocados and tequila and whatever their other big export industry is. Just double down on your exports. You'll do fine. Having a weak currency in your country isn't bad as long as you have political stability. It's political stability that causes hyperinflation, that causes mass deflation. It's not printing. If you have a reasonable amount of printing, it's not going to cause any of this havoc. It's basically political instability. So if your currency is dropping, but you're politically stable, that should be great for your country. More exports. I understand imports will be a little more expensive, so double down on your exports. Stick to your strength. Don't go with your weaknesses. So the Mexican peso going to 21 or 22, even 25, it's not that big a deal. Okay, ramp up your exports, and you will come back down, create some more political stability, cut back on some of your corruption, and you'll be fine. Okay, so that's my view on the peso. Okay, and finally, let's talk about Bitcoin. Okay, so Bitcoin popped as well, and again, you can blame the election, you can blame China, and I'm gonna go with the election. A lot of Bitcoin trading is still very, very speculative. Yes, there is good use cases for Bitcoin, which I've discussed on my blog, so you can check that out, or just Google the top use cases for Bitcoin with my name alongside it, and you'll find a really good article. So there are good use cases, and this hasn't been updated yet, actually. This has a daily update because it's an index. And we're back up to about 1730. And this is what I said the other day. We could do this head and shoulders right around 1730 and then come back down. With Trump winning, again, it's the same as gold. People will rush to safety, and Bitcoin is a bit of safety. So we could go up a bit. And I don't think this is the big breakout. I could be totally wrong. I found it a little more difficult even to predict Bitcoin than some of the other markets. I think this is just short-term hype like everything else. And Bitcoin will probably pull back down a little bit, but this is like my least confident prediction. What I will say is if we have calm waters in Bitcoin, like stability, like we had early in the year, and we creep up to this high of 1750, 750, 760, and we slowly creep up to it and then break above it, I am expecting just a fast move back to 1,000. Okay, but we need to get there slowly and calmly. If we get there, if we break out to 800 or 850 in the next few weeks, we'll probably top very, very quickly and fall back down. But again, this is all speculation. So I'll show you another chart. I believe this is Stamp. I believe this is Bitstamp. Nope, it's Bitfinex. Okay, so this is what I've been doing for my presentation. Those that are for my presentations, those that have attended my presentations would have seen this. I started this chart all the way back here, back in February of 2015 was the first time I did this chart. Bitcoin did not fall as low as I expected here, and it did not fall as low as I expected in the second quarter of 2016, but we are in this channel and we're hugging this channel. I just put this arrow in about 3 days ago or 4 days ago before I did my presentation in Argentina where I showed this chart. So I am expecting Bitcoin to go up. I would just like to see it hang out here along this line for a little bit. Also look at this Fibonacci resistance line, which has actually been on this chart forever. It's been there for years. And I even just noticed myself last week when I was updating this chart that this move in preparation for the halving stopped dead on, well, almost dead on. I have it at 757 and we stopped at around 765 or something. And then we pulled all the way back to the channel. So we've had this for a while. So that's my view on Bitcoin. I am expecting it to pull back a little bit. If you look at the RSI, we're just below the uptrend. The MACD has crossed to the downside, and everyone is expecting a huge rise. I tend to be contrarian a bit. So we can fall out of this channel for a minute. We have the 50% Fibonacci line. Now, I'm not even sure what my highs and lows on those Fibonaccis are. I have to go all the way back because they're pretty old. I might need a new one. Starting off from the lows of 2015. And this line is at around 635. I don't know if it will go that low, but I did say 650. We hit 670. It's really hard to say. We can easily go back to 650. We might never hit 670 again. It's really splitting hairs. I can be right either way. I can be wrong either way. So it's up to the trader to decide. All right, on that note, I am done with this update. Have my flight over to the conference in Russia. So if you are in the area, please come by. Hit me up on Twitter at @tone_. Hope this update was productive. My final statement is Trump is long-term good for the markets. In a way, I wouldn't have mind Hilary winning. And the reason is because her socialist policies would have completely brought down the US economy. I don't know if the US economy can be saved. It is most likely will still have a spectacular crash along with the bond market. It will be unfortunate that Trump will be blamed for it, but it's definitely not caused by Trump. It's the previous three presidents of Clinton, then Bush, then Obama. I mean, it could not have been any worse. Clinton was benefited by a good economy and not his doing, but he signed so many terrible laws because the Clintons are just so corrupt. Bush just did all this stimulus and printing, didn't do a good job, and Obama just took things to the next level. Clinton would have doubled down on Obama. Trump will try and reverse a lot of the stupidity that's been happening, but it might be too little too late. It also depends how much he can get through. So it'll be unfortunate when Trump is blamed for the bad economy, and then the US will go full out socialist policies with the next president. So we'll see how that goes. All right, guys. Have a good rest of the week trading, and I'll try and do one over the weekend, but I will still be in Russia. I'll be back mid next week, back to the US, and then I'll try and change up my chart so things are a little more professional. All right. Have a good day.